Thank you very much, everybody, and thank you to everyone who is new and old. Hey, Darius. Guess what? Hey, Canoe. All right. Today is pretty exciting for me. Just before we get started, I have a new desk, which has been literally put together minutes before this webinar. But it's awesome. It's one of those stand-up desks, where you can stand up, and it's really kind of interesting. I'm going to see how it goes. I do enjoy, like staying active and things like that. And one of the things I don't like about trading is you end up being locked to the screen, which is one of the reasons why I like trading the daily and weekly charts, and the 4-hour charts for that matter. I'm not a big fan of the 5-minute charts or 3-minute charts or things like that, but what I think this is going to do is it's going to allow me to actually not feel that, if you guys have a desk job, you know what I'm saying, where you're at a desk all day and you feel really sort of tired and slouchy, and if you're not into, yoga or Pilates, it's really easy to get sort of just sort of that slouchy look that you get from just sort of conforming to your chair. So I'm going to see how this goes, but it's really exciting for me that the first time I fired up my computer and monitors and everything is with you guys here at the live Naked Forex session. Pan says, I knew it was the chair and not me. I like the FX Pro charts. I just use them for charting because they close at 5 p.m. New York time, and they have a huge number of markets. And it's hard to find that same combo, you know what I mean? You can often find a broker that's offering a lot of markets, and I just use them for charting, to be honest. And you can find a broker that has a 5 p.m. close, but it's hard to find someone who uses both. And also the other thing is MT4 is quite common, and a lot of you I know are used to MT4, so it's nice to look at those charts. Now, many of you, if you're new here to the Naked Forex webinar, I trade without indicators, and I don't really have anything against indicators, but I wrote a book about trading without indicators called Naked Forex. So what we're going to do today is this is typically what I do for people that follow my trades and my videos. If you follow my trades and my videos, especially the ones that I post, what you'll notice is I often go through the charts and talk about why I like it or why I don't like it. So what I thought we would do here is I'll go through all of my charts here. I'll tell you what I see from my point of view, the naked trader's point of view, and then at the end we can look at your charts and you tell me what you've got on. This won't really take that long. It might only take 20, 30 minutes to go through these charts, and then we'll look at your trades. I can tell you right now, I know of a couple of trades that I'm interested in at the moment, so this webinar is timely. That's not always the case for me because I'm not always trading. Sorry, something happened. Can you hear me okay? Okay. I just heard a noise on my computer, which usually means my microphone unplugged. So if my microphone did not unplug, then I'll just keep traveling. I like Awanda. I like FXCM. Those are and IG Markets. Those are the brokers that I trade with. And like I said, FX Pros, for me, it's a charting thing. Okay, so Swissy. This is probably the easiest chart. Well, one of the easiest charts to trade. And you'll see that when we look at the Aussie dollar, it's got a similar sort of look and feel to me. And I'll tell you why. You'll notice here at the bottom of the chart, the market's come up and it's touched that level down there several times. This is the 92. I have it at 92.10, but you can easily draw it at 92. I'm going to go ahead and make this a different color. So it's navy now. And the reason why I make it a different color, because that's the most important support and resistance level on the chart. Why did I draw a line here? I draw a line here because the market has repeatedly respected this level. See how it touched it there, touched it there, touched it there on the way up, touched it there as support, double bottom support, and now guess what? We've broken through. The reason I love the look of this chart is because it has a clear target, and it doesn't have a whole lot in the way. Now, if I were taking a trade, let's say in this area, I would be nervous. Let's say that I was looking at taking it. Let me show you the difference here. Let's say I was looking at taking a trade right here. Well, the problem with taking a trade here is that you have a support level here, a resistance level there, and you have recent price action in the way. That any kind of trading in here I wouldn't do. Not on this time frame anyway, which is the Swissy daily chart. Now, maybe on a 1 hour you can get something nice off of a bounce down here or a touch up there. But in terms of the daily chart, this is what I love to see on a daily chart. To me, this is the ideal trading setup on a daily chart. In other words, what this is an opportunity for me to sell short, to short this sucker, sell short. That's like a stock term. I don't know why I said that. I got stock on the brain, I think, talking to a guy about stocks today, which, I don't know why anyone would trade stocks when Forex, the charts are so smooth and clean. Trading stocks is just like crazy. But anyway, this is what I'm looking for here. Now, maybe I adjust this to 92, okay, even, but somewhere between 92 and 92.10 is where I would have my level drawn, okay? I had it at 92.10, but, 92 is a nice round number. So this is what I would be looking for here. Let me break it down on the 1 hour. What I want to see is I want to see the market move up here to 92, touch it, and print a big bearish candle. Now, we've come close. The high here is 91.95, so that's pretty darn close, but it's not quite there yet. If it could get up there and print any kind of an exhaustion, like a long kangaroo tail or a big red candle, anything like that would be enough for me to sell this sucker short. And again, the reason why is because we had support here and support here. Also, obviously, back here, support. Now, we've closed below it, okay? We've closed below all of these closes. So we had to close there, that's higher. We had to close there, that's higher. All these closes are obviously higher than this close here yesterday. And these two are all, this close is also clearly higher. So what we have is the lowest close we've seen on this level. And as long as the market doesn't close back up above 92 today, we're sweet. And what you will often see, this is actually a trade in itself. I call it the Acapulco. And what you'll often see is where the market breaks through a level like it has here, it will often the next day come up and wick right up against it. Okay, so what was once support is now going to be resistance for today's candle. Somewhere between 92 and 92.10, I would expect this pair to exhaust and then start heading south. So let's talk about ways that I might trade it. One way that I might trade it is to simply put an order to sell at 92 even, okay? And then, to be safe, I would put like a 50 pip stop. So I'd go, I'm selling at 92, and then I put my stop at 92.50. Now, the next thing I would do is I would close this trade if any time during the time that I was in this trade, if the market closed, a daily candle closed above 92. So in other words, if it closed at 92.05 today, I would obviously be triggered because it would have pushed into 92, and I would also get out at a 5 pip loss. The worst case scenario, of course, is that it would blow all the way up to 92.50 and stop me out. That's quite rare, actually. What's more likely to happen is that it'll probably touch it and then fall all the way down to my first target, which is clearly here, 90 point. You see I have a level here at 90.79? I would probably target 90.85, just to be safe, because sometimes the market will sort of bounce really hard off these levels. And I'll show you what I mean when we go to other charts. But right now, like the pound Swiss in particular, but that's one simple way of trading this one. Okay? Hey Sharon, good day. Or Sharon, good day. Okay, so essentially this is basically what I'm looking at here. I'm looking at taking a sell on the Swissy, and I want to target 90.85. If we go to the weekly, what I want to see here, I'm going to go to daily actually. 1 second. 1 second. Daily here. Hold on. My next level, this is kind of good that we have it, is right here. Well, this is probably the best one. The next level would be right here. See how these candles couldn't get through it and these couldn't get through it? That's 90.65. So it's 90.65. It's 90. I would probably have it at 90.10. So first target's going to be 90.85. Second will be 90.10. So that's a really clear. Any questions about that trade? It's very simple, right? FX Roy says, how we could start a webinar with the euro or the pound is beyond me. I don't know. I just go by my charts. So I go with the Swissy, then the euro, then the pound, then the euro pound. That's just what I normally do. I spend a lot of time trading the Aussie too because I live in Australia, and it's just kind of like I have a friend Rob, and he trades for Canadian dollar a lot because he's Canadian. Just kind of easy, I guess, to trade your home currency. So actually, I usually start with the Aussie. And we've done Aussie webinars here for years and years. Okay, so the euro, very similar setup here to the Swissy. The thing about the euro, though, is that it has further to go, which is great. I would, however, look for a target here. So this is the same sort of setup here, but in reverse. So what we see here is the market's come down here, and it looks like it's bounced at 33.90, 1.3390. So on this one, it's the same, similar setup. What I would do here is I would put a buy. Well, there's a couple ways to do it. One is I could just get in right now and put my stop loss down here at 33.40, which would be 50 pips away. All right. The second thing I could do is wait for the market to make a new high. So if I know the high of this candle here, the last 1 hour candle. Now again, what I'm doing here is I'm taking a daily trade. I'm taking my direction is off my daily chart. Why do I want to go along the euro here? Let's just take a step back. Because the market has closed above this significant level, right? It's clearly closed above it. Now it's come back down. Well, I would expect this to be the bounce for it to go higher. So I've got a clear target here at 35 and a second target up here at 36.30, right? So it's pretty simple stuff. Now, target 1, target 2. Now, what's going to be the trigger? Well, I could break it down on the 4 hour or I could break it down on the 1 hour. On the 1 hour, I would look for either a close above this green candle. That's the very conservative way of doing it. And then putting the stop well below this level, because it could come back down here and bounce again, right? But well below would be around 33.40, right about here. So that would be maybe about 70 pips of risk or something like that. Remember, 70 pips of risk, and I'm looking to make about 100 pips of reward. And then when it hits the first target, I move my stop loss to break even, and then I go for another 133 pips. So that's the kind of trade management that I can use the lower time frames when I'm looking at a daily setup. So it's very clear daily setup on the euro. Looks like it's going to go higher. Now the pound's very different. The pound actually, you can see my numbers over here. This is an old trade. Basically what happened on this one was I sold off this busted kangaroo tail here, and it hit target 1 right here. Then I moved my stop to break even or plus 8 pips, and then it hit target 2 down here. This is a really old trade. What I like to do on my charts, if you ever see them, is the blue number is the entry price, the red number is the stop, the green numbers are the targets. And I always move my stop. So my stop would have been up here originally, and then as soon as I hit target 1, I move it down to break even or plus 8 pips in this case, and then I go for target 2. So that's kind of how why my charts look like that. Now, I'm going to go ahead and get rid of this ugly looking fib, and now it looks much more beautiful with these zones here. These are just support and resistance zones on the chart. That's all they are. What I think is happening here on the pound is that it's actually going to peter out. Well, we don't know, but this kind of little tiny candles with the wick starting to show, it usually means it's petering out. Like you see the same thing happen here where the wick started to pop out. It's probably going to double top here. If I had to guess, I would say it's probably, but we don't know. We have to wait and see. So the pound is a we don't know trade. The euro pound, this isn't really interesting to me. If it came down to 84.70, I would be interested. I don't like trading it off of this level because there's all this ugly price action. I take my trades on the edges, right? So I like trading here or even down here. but not here. This is an ugly chart to me. Canadian dollar, don't really have a whole lot to say about that one. You've come up to where we've seen a minor support resistance level. There's a major one up there. There's a minor one right here, and right on top of it, I don't know. It's not interesting. Aussie dollar, very different. Aussie dollar is very, very different. This is really cool. Okay. Very, very similar setup to our Swissy, right? Remember with the Swissy that we looked at? Aussie dollar is cool because what I'm going to do here is a very similar setup. It's a breakout trade. Hold on a second. 4 hour kind of makes sense here, but it doesn't really matter. 1 hour, we can manage it in 1 hour too. Basically, what I would do is the aggressive trader would just put an order right here at 90.40. Two ways to do this. Aggressive trader says, market gets to 90.40, I'm out of here. I'm going to take this trade, and I'm going to race off with it. I put my stop loss 50 pips higher at 90.90, which basically means it'd have to get up to these highs to stop me out. And then I sell, and I'm targeting 89 and then 87.50, okay? That's the aggressive trader. The more conservative trader would look for an exhaustion. What does an exhaustion look like? Well, for those of you that have followed my trading, this is a kangaroo tail right here. The open and the close are inside the previous candle's range. Let me just make sure that I got that right. Is the close inside the previous candle 92.17? And this candle 92.17. Yeah, well, it's just on the previous candle's range. And then the next candle takes it lower, takes a new low, and it did. So that's kind of this is a classic exhaustion. This would not be a kangaroo tail because, remember, the open and the close have to be in the bottom third of the candle, which is true here. Now, ideally, this one would actually have a little bit longer tail, but the open and the close are in the bottom third. The open and the close are inside the previous candle's range. It's come up where the market sort of topped out before, although it did go a little bit further. And then the next candle actually triggered a sell order that's placed a few pips below the low. And so that makes it nice. Now, targets, this is a nice spot for a target, obviously. It blew through that. Second target would have been right here. It actually blew through that. And the third target probably would have been here, here, or here, depending on how aggressive you want to get. But that right there is I just killed the arrows. That's all right. That's an example of what an exhaustion would look like if the market got up here. Another thing it could do is just print a big red candle and a close down near the low, like this candle right here. That would be also good enough for me to take a trade. But it's very similar to the Swissy, guys. I'm sure you can see the similarities on that one. Very, very similar. Euro Aussie obviously looking like it's going to take off with the Euro going up and the Aussie going down. Now, I will say it could double top here. We don't know. This isn't really something that I would be interested in the trade at the moment. I kind of need more information on that one. Here's the odd CAD. The numbers on here were from an old trade. You can see that I sold here at 93.52. Stop loss was up here at 94.68. And it actually hit target 1. I moved the stop loss down to break even, and then it just stopped it out at break even at plus 5 pips because basically it never got down to target 2 for me. And that happens actually quite a bit, probably about 2/3 to 70% of the time. And then, 30 to 35% of the time you'll get that second target or third target even will go. But right now it's sort of consolidating. There is a case to be made for a trendy kangaroo tail, but I'm not really interested in it because of all this congestion right here. I would rather that it print something like this above these highs. Then it's following this downward trend, and some of you that are trendline fanatics probably are aware of this. That's not a good sign either. So this for me is a no trade. And most pairs are going to be a no trade. Really, the only ones that I like now are Swissy, Euro, and Aussie. But we'll keep going. All right, so Aussie CAD, no dice. No dice right now. Aussie Swiss. Now, Aussie Swiss actually is looking like it could double bottom down here, but we don't know. So we need more information here. We need another candle that says rejection of this low, or, it's a breakout or something that we just no information right now. Pound Aussie obviously off to the races. Don't really have anything to say about that. Some of the trend traders are going to be taking trades here, particularly if you see this close today above this close over here, which it is right now, but we've got long ways to go before New York and all that. New Zealand Swiss is coming back down. Don't really have a whole lot to say about this one. I would like to see a trade off of this level down here, which is around 72, but we're not there yet. Pound Swiss. I'm actually in a trade on the Pound Swiss. Let me show you. The levels are not on this chart, but let me go to another one for you so we can see. It might take a second for you guys. Leonid wants to see the Kiwi. We'll look at the Kiwi. We'll definitely get there. I just want to go to the Pound, or the Pound Swiss. So here's my trade that I'm currently in. And it didn't hit target 1. Darn it. But I sold at 44.52. Stops at 45.89. And I'm targeting 43.20 and 41.20. But at the moment, it's kind of just, it's in a bit of a retrace. I wouldn't really get nervous with this trade unless it closes above 44.30, which, it's 16 pips away right now. But, we still have New York to go and stuff like that, so we'll see what happens. I suspect that a lot of what we're seeing on these charts, kind of like with the Euro, the Swissy, the Aussie, and the Pound Swiss here, this kind of little retrace move here is just a bit of a tease, and then it'll take off in the other direction. That's what it looks like to me, so we'll see. All right. Let's keep traveling along, folks, and we'll get... in other words, the Pound Swiss, I'm just holding it right now. Pound CAD, beautiful chart. Look at that. Bam. I will say this about the Pound CAD. This would be a great spot for a bounce. Notice how the market took out this high here, and it still hasn't come back down here. This is the kind of trade that, we looked at similar ones on the Swissy and the Euro and the Aussie, but sometimes the market doesn't touch it immediately. And then it takes longer, but sometimes those are the best ones because it's just sort of a reload, So if the Pound CAD came down to 62.20 and gave me a good bounce on the 4 hour or the 1 hour or something like that, next week or at the end of this week, I would be interested in that. I would definitely be interested in that. But right now, of course, there's nothing to do about that one. Euro Kiwi. I just noticed something on this chart. I probably should have a level off of these lows here, here, and here because it just bounced there once again. And let me show you what the line chart's going to show. The line chart's going to clearly show that that's a good spot. Right there. We got a bounce here, one there, and one there. Now, it doesn't look like it's spot on because these are closing prices, right? The line chart connects closing prices. But the candles are going to show that this actually is a bounce, and this is a bounce. Watch. See? The wicks. Boom, and bam. So, the Euro Kiwi, if it gets up to 70.40, it could give us a negative, like a bearish setup, and that would be brilliant. I'd love that. Yeah, Euro CAD, don't have a whole lot to say about this one. It's above that high there. Could come back down and bounce there, but not yet. CAD Swiss is going to be similar to the Euro CAD, but in reverse often. Some sort of a bounce on 88.50 would be good, but not interesting at the moment. This pair, I traded this one last week. This is interesting what you're seeing happening here. Everyone see this? This is a classic pattern. It usually means trend continuation. Because we don't have a horizontal side, see, we have a trend line and a trend line, so it's a classic squeeze. And usually it will keep going in the direction of the trend, which is clearly down here. If you ever have a question about whether the trend's going, where's the market going, just all you need is a 6-year-old. bring him over or her over to the computer, ask them, is the line going, move to a line chart and say, in whatever time frame you're interested, and say, is the line going mostly up, going mostly down, or is it going mostly up and down? And our 6-year-old would tell us that the line is going mostly down. I'm pretty convinced of that. Okay, let's keep going. Singapore dollar. Yeah, if it could get to 28, I'd be interested in a sell around 28.10, like this kangaroo tail right here. Notice that this kangaroo tail has all the rules. You open and the close are on the bottom third of the candle. You open and the close are inside the previous candle's range. The next candle takes out the low of the kangaroo tail. It went down to the first level and then the second level. Didn't make it to the third one. Well, yeah, it would have probably stopped you out at break even yesterday or 2 days ago. Yeah, yesterday. Had you held this waiting for, say, this level. But I actually think that it's probably, given that we have touches there, and all of these, it's probably a good spot for a zone. So I've got one on there now. Let's keep going. And the Kiwi. Who wanted the Kiwi? Pan on Fire says, Pan on Fire says there's a kangaroo tail on the cat on the 4-hour. Let's take a look. But who wanted to see the Kiwi? Leonid did. Okay, so Leonid, here you go. This is a good chart because it doesn't have any lines on it. So let me just do that right now. If you're new to naked trading and you haven't seen this, well, what we can do is just show you. So the easiest way to do it is to go one time frame up. So I'm on the weekly now because I'm looking at a daily chart. I'm going to go to the extreme lows and the extreme highs, drawing my levels, and then I'll break it down on my daily chart because that's what I'm trading. But normally the most important ones are going to pop out on the higher time frame. So the most important levels should be identified right now on the weekly. Everyone see why this is a level? Boom, boom. It's a little bit of a blow off. That might even have been a touch right there. I'm not sure. Yep, sure was with the wicks right there. The wicks touched. And then we're going to have one here with all these touches. And then there's an ugly one in here somewhere. Right there. But I probably wouldn't trade off that one just because there's not a lot of room for it to go anywhere. And there's probably also going to be one right around where we're at right now, just a little bit lower. We have that and that and that. So there you go. That's how I draw my zones. Then I'll go to the daily and just make sure that I didn't miss any. Go to line chart again to make sure. Are there any that pop out that I missed? Something that's not quite right. And it looks like there's going to be one in here. Right in this area. And there's also going to be one sort of where we're at. Well, I could draw one there. And then also kind of where we're at right now, actually. Right there of these, see? Okay, so that is, yeah, cool. That is, Kiwi. This is also one of my favorite trades. We'll probably do a whole webinar on this. I don't know if any of you have seen anything on that, but these suckers are brilliant. Yeah, okay, so here's what's happening on the Kiwi. It's kind of stuck. This is what the Aussie was like last week. It's stuck in, like, I could draw a big box right here, and I could say, you know, here's the low down here, here's the high up here. On the high, I've got, we might not even count these touches here because the box is just starting, but I've got 1, 2, 3 touches on the top side at 81. And I've got at least 3 touches down here, 1, 2, and maybe 3 here at 77.20. So this is a giant box, 1, 2, 3, 4 down here. And, you know, really I want to get out of this box because, maybe it's bounced off this middle area here. Boxes often have a middle area where the market will bounce around off of, but That's not a very interesting chart to me. Now, the Aussie Singapore is brilliant how it did. Do you see how it did a kangaroo tail? Right here? Bam. Like that. That is pretty cool. Yes, it is. So that is a nice kangaroo tail up 1725. Close, triggered the sell. It's right on support here. It needs to break through this to get down to 1291. Okay, and then pound New Zealand. Up here. Let's go to gold. So really, pound New Zealand needs to get to 1.20 or 2. It needs to get to 2. That's where I'd look for a sell on that one. Gold, consolidating. It looks like it's going to run up to 1410. This is just a boom, boom, like that. So we'll see. We'll see how it goes. Silver. This is what we were talking about on the Swissy, the Aussie, and the Euro. We have a breakthrough, and the market touches it. So silver's done that. So how would I trade this? Let me show you. How many people here trade silver? Do people trade silver here? Anyone? Is it something that you like to do? Or are there other things that are very infrequently? Yeah, sometimes the leverage might get in your way if you don't have good leverage on silver. It can. So, some traders tell me it's easier, they'd rather trade gold, but Pan on Fire says infrequently. Maybe I shouldn't spend my time on silver. But basically, this is what we were talking about before on those other pairs guides. So it breaks out, touches it. Now, the confirmation comes where? It comes here, right? The market goes like this. That's where it needs to go for this to be a trade. If it doesn't go there, so this is a buy order at 23.40, okay? If it doesn't go to 23.40, then it's no trade, right? But, and especially if it gets back down here to 22.30 again. But if it gets to 23.40, that's a great trade. That is a great breakout, retouch, and go. Because it's given us this really beautiful kangaroo tail. The question is, where is it going to go? Well, obviously, we've got a level that we're basically on top of right now, which is these lows, these highs. But the target for me is here, 24.34. That's target 1. Target 2 is an easy one, really easy one, right there where it bounced. And now you're looking at 26.50. You can see I got from an old trade, I got 26.50 there. So that, to me, is a really nice looking sort of continuation pattern. And it's the kind of thing I was talking about. Maybe, we see that on some of those other pairs like the Euro, the Swissy, and the Aussie. Okay? Yeah, Pan on Fire likes gold better than silver. That's fair enough. Pan on Fire. I had one of those the other day. It was scared me so bad. I didn't know what, it was olive oil on fire in a pan. I didn't know what to do. Do you throw a towel on it? You can't throw water on it. I'll tell you that right now. Don't do that, whatever you do. I would not make a very good fireman. Okay. Ooh, 76, 70. Yeah, this same like the Kiwi. Some people are going to say there's a head and shoulders here, head and shoulder, but oh man, I don't trade charts like this. There's so many other markets here. Why would I trade that chart? I wouldn't trade this one either. I would wait for it to get down here to 75. It needs to get to 75 and bounce here. I would not trade it right here, not at all. And I know some people are going to get suckered into this one. If you trade, actually probably not, because a lot of people don't trade the Singapore yen. But no, I wouldn't take that one. Dollar yen, ugly. Swiss yen, total mess. These yen pairs, I'll tell you what, man, they're going to break out. When they do, they're going to do something crazy. But this is the box. Here's the low, 103.60. The high's up here on 107.10. It needs to get out of that box. The midpoint somewhere around 105.50, right around there. So it needs to get out of that box, really. We can trade off the edge of the box. See how this kangaroo tail hit the edge of the box here? We can trade off the edges, but it's way more fun to wait for the breakout. Euro yen. Some people might go, oh, what if this closes like this? It's a kangaroo tail. No chance, buddy. No way am I taking that one. Same here. No. This is technically a kangaroo tail, but look at how it didn't reach. See, I would prefer it to actually go higher than this high. It didn't even actually get to this level. So to me, that's no dice. And then the Aussie yen. You could take a sell here. The Aussie looks better though, because it's got further to fall. New Zealand CAD, no dice. Someone said there was a CAD 4-hour. My CAD doesn't have a kangaroo tail on the 4-hour CAD. My Looney chart doesn't show a kangaroo tail. It probably because you have a different closing time on your candles. Mine actually shows something different. Mine shows this, which is a possible double top, but we don't know yet. And I'll tell you what I would look for on this one. This is probably really subtle. It's a good chart to look at. I would actually look for a close below this close right here. This is the lowest close we've seen over here. Of course, not counting this one, but see how they're all kind of doubled up here, these candles? I would look for it to close on the 4-hour below 104. What was the close on this one? 104.13, yeah. A close below 104.13. That would also obviously make it a bearish big shadow. It's a special case engulfing candle that we talk about here at these webinars. And that would make enough for me to take a double top trade. And I would sell, stop loss above the high, put the sell order a few pips below this current candle. But if it could fall another, 15 pips and close there, that would be brilliant. When is this candle going to close? It's going to close in about 2 hours and 20 minutes. So, are there Pan on Fire? You're looking at IG charts. Yeah, they're probably on the hourly. Oh, I thought you were looking at the 4-hour. Yeah, on the hourly, you do have a bearish big shadow. The issue, though, is that I'm on top of support on the 1 hour. See? And so that's not good. But on this one, what I would do, I would wait for the 4 hour and see if we can get a close below the low of the previous candle, because that would be, for me, a brilliant trade. And even some traders might even put their stop above this one, because, no, this one does have a higher high. I wasn't sure. It's nice when the second top has a higher high, because what it means is it's cleared out the stop losses that were above the previous high, right? So it's always nice to see a higher high on the second one. But it still has to show the weakness too, and not yet. Don't have that yet. Any other charts, guys? Anyone in a trade right now? Is there something you want to look at? Pound CAD? Well, on the 4 hour. Let's take a look. Well, this is just one of those opportunities to buy. I did talk about on the daily. The best, there's a couple of spots here. And when you have a trend like this, it really pays to be patient, right? There's really only, to me, 2 spots where I'd be interested in a buy here, and you can see I've just marked them. So if the market came down to 62.71 and gave me a nice bullish candle, or if it went a little bit further, it would even be better if it came down to 62.40. Either one of those would be a brilliant spot for a buy. That's where I would look for on this one. John says the Swissy just hit 92. Did it? Sweet. Oh yeah, buddy. Okay, so, right. So how does this work again? Couple of different ways. So for those of you that were late, who was late? Jack 1. Jack 1 was late. Okay. Here's one way to do this. There's a couple of different ways. The first is to put just to get in right now, okay? And then the stop is at 92.50, right? This is for those of you that are adrenaline junkies. You just can't stop. You can't help yourself. Okay. Now, the more conservative people would actually wait for a big red candle. So that's probably going to be in the next hour because this hourly candle's got 18 minutes, right? So, that's kind of the way I would do that one. And, okay, so let's say I'm trading the 1 hour charts and I want to take this trade. I get in right now. I put my stop at 92.50. If I get a 1 hour candle closing above 92, I close the trade. Close at 92.02, I'm done with the 2-pip loss. Okay? That's it. Game over. The other thing is it could just keep going and hit my stop loss and, okay, bummer, I lost the trade. But remember, the risk reward on these is brilliant because I'm taking 50 pips of risk, which, even though I have a 50 pip stop on this, the average loss is not going to be 50 pips. It's going to be closer to like 20, okay, over time because I wait for that close. At the closing price will get me out of this. Remember, I'm taking a 50 pip risk, and what's the reward on this? The reward is 115. 193. I mean, on 50 pips, you can afford to lose, 4 out of 5 and be all right. So this isn't a big, okay, maybe not 4 out of 5, but 3 out of 5. So it's not a big problem if it ends up being a loser. But this is definitely the type of thing now that I would take. This is the type of trade. Now, here's what I like to do, though. I like to wait for the exhaustion candle. Maybe the next hourly candle is a big kangaroo tail, stabs up into here, and peters out at 92.25. Or maybe I get a big red candle and engulfs all 4 candles here. Something really cool like that. A big red candle that just takes them all out. Those are the kinds of things that say, okay, they scream out, all right, game over, the trend's over, the market's going to bust up and go higher, that sort of thing. So there's really 2 different ways, and then I put a sell order 3 pips below of that big red candle or that big kangaroo tail. So one way is to get in now. Another way is to actually wait for the exhaustion candle. If you're more conservative, you like to have a higher win rate, like I do, you go the conservative route and you actually wait for price action to tell you the story. But if not, you can go ahead and get in right now, use the 50 pip stop and get out if you get a close up there. What's the Aussie done? Has the Aussie done it yet? Let's see. Now, Aussie hasn't hit 90.40 yet. But boy, it's close. It's within 8 pips or so it's pretty good. Jack, we talked about the euro and the Swissy. The euro is a nice buy. If we get, this is sort of like the Swissy, but in reverse. So, if the euro gives us a nice bullish candle here, we can go in. Or the other thing is, perhaps the euro, we just get in right now. Hold on a second. What's my daily? Yeah, right now, it's at 83. It's actually 7 pips lower. See, at this stage, I'd be tempted to wait for the bullish move, the bullish candle here. Notice how it printed a bullish candle right here, but the market didn't trade higher. See, the current 1 hour candle did not trade higher than this one. What's the high? 34.07. What's the high in the current candle? Wow, 34.05. See, it never got to 35.10, 35.11, which would have been the trigger price for this. That's why I like to use buy stops and sell stops. I lose out. I don't get as many losers. I miss out on those ugly losers because I'm waiting for the perfect setup, So it's not a big deal for me to wait a little bit longer. I love using buy stops and sell stops. I love using them. And people get frustrated with that because they like to take retracement trades. There's no reason why you couldn't go in right now and put a stop loss down at 33.40. The problem is, if this candle, it's got a couple of minutes left, 10 minutes left. If this candle closes really ugly, it's probably going to fall further, So Cable, we've already talked about the cable. Obviously, it's looking like it may double top up here at 57.40. That's kind of the area that I'm looking at on that one. The pound Swiss, if you guys took the trade that I did on the pound Swiss, then you know I'm still waiting. I haven't moved my stop or anything. The pound Swiss is interesting because I get a lot of questions when this happens, what happened on the pound Swiss. Pound Swiss printed a kangaroo tail right here, and it triggered it, and then it printed another kangaroo tail. So a lot of people come to me and say, oh no, what do I do? Well, what I always do is I go with the most important one. Why is this kangaroo tail the most important one? Anyone know? Why would this one be more important than that one? And this I got tons of emails when this happens, and it happens more often than you think. Yeah. Heath says it's on support. Yeah. Here. This kangaroo tail right here is super important because the market's been going up, and it hit a level that it hasn't hit in a long time. The last time it hit this level was right here, right? This kangaroo tail has no space whatsoever. So if you look at it that way, the space on this chart, the space on the first kangaroo tail, the first daily kangaroo tail, goes all the way back to here, right, before it starts hitting candles. This has tons of space. Look at all that space. That space is roughly, 50 days, 50 days since the market hit that level, okay? What about this kangaroo tail? How much space does it have? 2 days ago it hit, so that's no space. We know that reversals tend to happen places like this. Like this kangaroo tail did right here. See? It triggered lower in the next candle. It did retrace nasty, but then it fell. And that's normally that is what a reversal looks like. If you're looking for a reversal, look for space. There's a space. Look at all that space. That much of the kangaroo tail printed on a unique area on the chart where we haven't seen price action in a long time. Since here. That's great. And that's exactly what this gave me. It gave me some space. This one, no space. Sure, it's on support, but guess what? It fell right through, and then now, I still think, even though I'm going up today so far, I still think my 43.20 target is going to come into focus. So I'm holding tight onto that one. Anyone else? Any other charts or anything you want to take a look at? I'll go back to my other charts. So just to sum up, I like a sell on the Aussie, a buy on the Euro, a sell on the Swissy. I'm in a pound Swiss trade. And, the Euro Aussie is also a potential, could give us a breakout here, could give us a top, double top. Lots of things could happen here. I tend to think it's probably not going to turn around today. Could turn around tomorrow or the next day. But I tend to think it's looking more aggressive, like it's going to maybe take out this high. But we'll see. The reason I say that really is because I'm thinking of the Euro US dollar and the Aussie US dollar charts, which would tend to suggest that this would take off and go higher, but we'll see. Okay, are there any questions about anything, guys? Anything at all? Oh, do I worry about the FOMC? No, don't worry about that. No. I worry about the price patterns on the chart. Yeah. Aussie yen jack. We did look at the Aussie yen. Not nearly as interesting to me as the Aussie is. The Aussie looks like a much better sell to me than the Aussie yen. It's a similar setup. It's just the Aussie looks better to me. That's all. I would much rather sell the Aussie. Let me show you. At 90.40 right here. Yeah. I'd much rather sell the Aussie than the Aussie yen. John, what is your main time frame to trade from? I love these charts right here. I will take tons of daily charts trades. I also take the occasional weekly chart trade, just because they don't happen that often. I have had a few lately though. And then the 4-hour. So I like the 4-hour as sort of my staple. I don't necessarily trade a lot of 1-hour charts, but in cases like tonight, it makes sense. If you get a nice bounce on the 1-hour euro, or a breakout on the 1-hour Swissy, a bounce on the 1-hour Swissy. These are the kinds of 1-hour charts that I like because I've got the daily at my back. The daily is at my back, right? I know that the Swissy broke through and closed lower than it's closed in a long time. That tells me that it's broken through this level, and so this is probably just a retracement. It's probably just a move up retracement. It's retracing this big red candle from yesterday, and in the next day or two, it's going to keep falling some, further. So that's when I'll use these 1-hour charts. So it's really occasionally, John, that I do that. But my bread and butter is the 4-hour and tons of daily charts. Occasional weekly, occasional 1-hour charts. Hopefully that makes sense. I'm not sure. I think, yeah. So, and if you're a fundamental trader, I wish you good luck. I just haven't been able to figure out how to interpret the news. I don't know how to interpret the news the same way that the market will. So what I found is much easier to just interpret the price action. And by watching the price action and looking for these sort of repeatable patterns that occur on support and resistance levels, it simplifies my trading greatly. I don't have to be concerned about, what some banking minister said in Japan or, the RBA guy in Australia or whatever. It's no longer as important because I can see on the chart that the Swissy fell below critical support. So, it simplifies my life by not. And I know, and people say, well, you have to take fundamentals. Okay, well, if that's part of your belief system, then you really should do that. But for me, everything I see is on the charts. And in fact, the last couple of non-farm payrolls, I've picked what the number would be just by looking at the charts. You can tell sometimes, not always, but sometimes you look at the charts and go, well, it looks like, it's dollar negative or whatever. And then you can kind of see what's going to happen before it happens if the charts are really clear. Sometimes the charts will tighten up and they'll go into a range and you don't know what's going to happen. But the last 3 or 4 non-farm payroll has been really interesting because the charts have kind of hinted at what was going to come next, which is really cool. All right, folks, I wish you very happy trading. I appreciate all of your time here. Thanks so much, everybody. Lots of familiar faces. And thanks, Adinda. Thanks, Black Cat. Thank you, Tom. Take care, Pan. See you, John. Bye, Nasser. Take care, Darius. Have a wonderful... Bye, Canoe. I like it when you whistle. See you guys.